Hello and welcome to CMC Markets presentation on how to trade gold against world currencies. My name is Colin Cieszynski, Senior Market Analyst. Over the last couple of decades, when people have thought about trading gold, in a lot of cases they've thought about gold as a commodity and gold's advance being part of the commodity bull market along with energy and grains and copper and other commodities. However, gold historically has also acted as a currency. Gold and other precious metals have been considered a store of value for centuries and millennia really. They've traditionally historically acted as a defensive haven during times of crisis and also can act as a hedge against inflation. Gold is most commonly traded in US dollar terms, and historically, the trade between gold and the US dollar has also acted as a proxy for sentiment between hard assets relative to paper assets. Did you know that gold is also priced in other currencies such as the pound, the euro, the Australian and Canadian dollars, the South African rand, and the Japanese yen? Although historically gold's value has primarily been measured against the US dollar, in recent years gold has also started to trade more actively against other major currencies. In particular, this decade, capital has been flowing in significant amounts back and forth between gold and the euro in response to the sovereign debt crisis. During times of fear, gold has been seen as an attractive haven for capital, while in times of complacency, capital has started to move back into risk markets. Gold has also become more active against the Japanese yen of late, as speculation that there could be more aggressive central bank easing has undermined the perceived value of the yen. As the yen has declined, its value relative to gold has also declined. And we're going to show a chart here from Bloomberg on the euro versus gold to give an example of how these markets really do trend significantly. We can see that in this case there was an uptrend for about 6 months, a downtrend for about 6 months, and signs of a trend change. So certainly for traders there do appear to be significant opportunities to trade gold against other currencies. For trading gold with CMC Markets, you can trade both cash and forward gold contracts, and in addition, FX trading are all available on a 24-hour basis on weekdays through the same account with CMC Markets. This enables you to trade gold against any other major currency by combining a commodity contract trade with an FX trade. First of all, when looking at trading gold against the US dollar, the standard gold contract that's offered is priced in US dollars. So basically, you're trading gold against the US dollar. If the value of the gold contract goes up, it means that the value of gold ounces relative to the US dollar has increased. At the same time, the value of the US dollar relative to gold has decreased. Considering that, we can then consider gold as a currency pair as well. And the symbol we're going to use is XAU as a symbol for gold, a US dollar. So what does that mean? It means how many US dollars does it cost to purchase 1 unit or 1 ounce of gold? In a long contract basis, you would be long the gold and short the US dollar. If you were short the contract, it would mean you were short gold and long the US dollar. Once we consider this, then we can look at ways to combine trading in the gold contract with an FX pair to generate the performance of gold relative to other currencies. So in the first set of examples, we're going to look at pairs where the US dollar is the base currency. So examples of this are the US dollar versus the yen, the Singapore dollar, the Canadian dollar, and the South African rand. So if you're bullish on gold, and for these examples we'll use the yen, you could go long XAU US dollar and long US dollar yen. So in these cases you would end up going long both contracts. And looking at this in FX terms, the first contract would be long gold, short the US dollar. The second contract would be long the US dollar and short the yen. If you then notice, you'll have a long position in US dollar and a short position in US dollar, so they cancel each other out, leaving you with a performance of being long gold and short the yen. On the other hand, if you're bearish on gold, you could go short both of these contracts, short XAU US dollar and short US dollar yen. In FX terms, the first contract would mean you were short gold and long the US dollar, and the second contract would mean you were short the US dollar and long the yen. Combining these two positions, you have the two US dollar positions that once again cancel each other out, which would give you the performance of being short XAU or gold and long the Japanese yen. Looking now in terms of gold against other currencies, we'll consider pairs where US dollar is the counter currency. Examples of this are the Euro US dollar, the Pound US dollar, the Aussie dollar, and the New Zealand dollar. So if you are bullish on gold, and in this case when we look at the contracts, you would go long one side and short the other one. So in this case, using euro as an example, you could go, if you're bullish on gold, you could go long the gold US dollar contract and short the euro US dollar pair. So in FX terms, what this would mean is in the first contract you would be long gold, short the US dollar, and then using the second pair you would be short the euro and long the US dollar. Once again, you can see you have a short position in US dollar combined with a long position in US dollar cancels each other out, and that gives you the performance of being long XAU or gold and short the euro. On the reverse side, if you're bearish on gold, you could go short gold US dollar and long the euro US dollar. So in FX terms, what these positions would mean is the commodity contract would mean you were short gold and long the US dollar, and the FX pair would mean you were long the euro and short the US dollar. Once again, the two US dollar positions cancel each other out, which gives you the relative performance of being short XAU and long the euro. That concludes our presentation on how to trade gold against world currencies. We invite you to check out other videos in this series. Thank you and have a great day.